Hey everyone, welcome back to Corporate Decoder, the place where we decode the secrets hidden in corporate filings. Today we're diving into Daily Journal Corporation's proxy statement, and let's just say there is a bit of a boardroom drama brewing. This document is essentially a heads up to shareholders about an upcoming meeting, but it is more than just an invitation. It is where the company lays out what is on the agenda, who they want in charge, and why you should listen to them. And believe me, this year there is a particular shareholder who is causing quite a stir. You know, most of the time, these shareholder meetings are pretty routine. They're about electing directors, approving accountants, and saying yay or nay to executive pay. But today, we've got a situation where one shareholder, Buxton Helmsley USA Incorporated, is trying to shake things up, and Daily Journal Corporation is pushing back hard. So, what is the deal here? Buxton claims they want to nominate their own people for the board. The company's response, tough luck, you weren't a shareholder in time, and even if you are now, you only own one share. Yep, you heard that right, one single share. It's a long shot, but they're trying to gain control with minimal investment. Daily Journal Corporation is clearly worried, and they are urging everyone to just ignore Buxton and vote using the company's own proxy card for their chosen directors. This whole situation highlights a bigger battle for control, and it is not just about a few board seats, it is about the direction of the company. They're really doubling down on this, almost pleading with shareholders to stick to the company's recommendations. It shows they see this as a significant threat. Now, let's shift gears from the boardroom battle to the company's financial health and leadership. Looking at the executive compensation, we see Stephen Myhill-Jones, the Chief Executive Officer, earning a cool $1 million in fiscal year 2025. That is split between salary and bonus. In the previous year, his total compensation was a bit higher at $1.27 million, mostly due to stock awards. Then there is Tuesday 2, the Chief Financial Officer. In 2025, she received a total of $797,705, which includes a significant salary, a bonus, and non-equity incentive plan compensation. Her compensation in 2024 was lower at around $421,000. It is interesting to note that Miss 2 is retiring in early 2026 and has a separation agreement. This move by Daily Journal Corporation to bring in Eric Nakamura as the new CFO in December 2025 signals a transition in financial leadership. Let's dig a little deeper into the executive pay. The company provides a table comparing compensation actually paid to the CEO each year with key financial performance indicators. For 2025, the CEO's compensation actually paid was about $978,888. This is compared against the company's net income, which was a very healthy $112,137,000 in 2025. In 2024, net income was $78,113,000, and in 2023, it was $21,452,000. This shows a pretty strong upward trend in profitability. The company is arguing that their pay structure aligns with shareholder value, and these numbers seem to support that. And what about the directors who are not employees? They're each getting a $25,000 annual stipend, plus stock awards valued at $25,000. In fiscal 2025, John B. Frank, Mary Conlon, and Rasul Rayani each received a total of $50,000 in compensation, primarily through a mix of cash and restricted stock units. This seems like a standard way to compensate outside directors, ensuring they have a stake in the company's success. Now, let's look at who actually owns the company. RWWM Incorporated appears to be the largest shareholder, holding about 24.3% of the common stock. That is a significant chunk. Next up is Peter D. Kaufman, as trustee of certain trusts for the Munger family, holding about 9.5%. Then we have the Vanguard Group at 7.3% and BlackRock Incorporated at 6.7%. These are substantial institutional investors, and their presence indicates a certain level of stability and attractiveness in the market. For the accountants, the company is asking shareholders to ratify Baker Tilly Us Incorporated as their independent registered public accounting firm for fiscal year 2026. They've provided a breakdown of fees. For fiscal year 2025, Baker Tilly billed around $418,500 for audit services. They also did audit-related services for about $279,500, mainly for internal control enhancements and accounting consultations. It is good to see they're transparent about these fees. This is the say on pay vote. Shareholders get to vote, though not in a binding way, on whether they approve the executive compensation plan. The company wants approval for the compensation of its named executive officers. The audit committee, comprised of John B. Frank, Mary Conlon, and Rasul Rayani, has reviewed the financial statements and discussed them with the independent auditors. They've concluded that the financial statements should be included in the company's annual report. This is a standard but crucial step in corporate governance. Now, let's talk about the potential risks and opportunities for Daily Journal Corporation. The company acknowledges that they've had material weaknesses in their internal controls for financial reporting. They've been working to fix these, improving their finance department, implementing new systems, and bringing in a new CFO. They are confident they'll fully fix these issues by fiscal year 2026. This is a positive sign of proactive management, especially given the challenges. Let's revisit that Buxton Helmsley situation. It seems like this isn't their first rodeo. Back in July 2025, they were sending letters arguing about accounting practices and demanding board seats and a consulting contract worth potentially $24 million. When that didn't fly, they resorted to threats, trying to get the CFO to refuse to certify financial statements unless the company entered into a cooperation agreement. Now, they claim to be a shareholder and are trying to nominate directors. The company's stance is that Buxton is trying to leverage a tiny stake for influence. This aggressive tactic from Buxton is a clear risk, potentially leading to costly legal battles and distracting management from running the business. The company is preparing for a potentially contested election, estimating costs of $150,000 for an uncontested election, and approximately 10 times that amount if it becomes contested against Buxton's nominees. This shows the financial impact of such disputes, from what I can see. Daily Journal Corporation is in a solid financial position, with profits trending upwards. The leadership is actively addressing internal control weaknesses, which is a good sign. However, the aggressive tactics of a shareholder like Buxton Helmsley USA Incorporated present a significant risk. Their attempt to influence the company with a single share highlights the length some entities will go to, and the company's strong pushback shows they are determined to maintain their strategic direction. This upcoming annual meeting will be a crucial test of shareholder confidence and board resilience in the face of external pressure. Alright, that is our breakdown of Daily Journal Corporation's proxy statement. What is your take on this shareholder activism and the company's financial performance? Drop your thoughts in the comments below. If this deep dive was valuable, hitting that like button really helps, and subscribe for more corporate insights. Don't forget to check out our Discord community linked in the description for more discussions. Thanks for watching, see you next time.